Hello everybody, a very good morning to you all and welcome back to howtotrade.com and another one of our live streams here in the trading room and of course across our Twitter, LinkedIn, Facebook and YouTube accounts. I do hope everyone has had a fantastic morning so far and a decent week in the markets, albeit it's not been as volatile as we've seen in previous weeks, but that's fine. We expected that. If you tuned into my stream on Monday, where we always go through the top events and opportunities of the week, I mentioned that this week could be a little bit of a fallout from Jackson Hole, a little bit of a pause week, and I think that volatility may come back into the markets potentially at the end of this week when we've got the core PCE price index, which obviously is the Federal Reserve's primary tool for inflation. So that will sort of fuel the whole rate cut debate that's going on at the moment. So still some decent moves, still hopefully able to make some good profits this week. If it's a week where you like to sit out, that's fine as well. I've certainly had weeks where I wouldn't trade at all. So far this week it has been one of those weeks. Hopefully that can change when we go through the agenda for today, which is to basically use smart money concepts to analyze the stock market. So all the different indices, really. Probably going to go through the Nasdaq, the S&P 500, the Dow Jones, the FTSE maybe, and probably the German stock index as well. Probably go through those, and that should be enough for to give us a good idea of where we expect stocks potentially to be heading in the next sort of coming days or weeks. Hello to you all in the trading room. If you are around on YouTube or you are around on any of the other platforms, I can see the YouTube and Facebook chat. So if you do have any questions for me whilst I'm on the stream, then feel free to go through that. No problem at all. And other than that, we are going to basically go through the smart money concepts for the stock market. So hello to you in the trading room as well. Good to see you all. Bobby, hello to you. Good morning to you, Martin. It's good to see you, and I hope you are doing well on this fine Wednesday morning. Hello to you, FaZe, having a look at Eurodollar, and I will go through Eurodollar as well. Don't worry, I haven't forgotten about it. Curtin, hello to you as well. Good to see you. Lita, hello to you. Good morning. Treehawk, good morning to you. And FaZe, good morning to you as well. I hope you are all doing well. Just didn't know if I was having some connection issues there, but I think I'm all right. It's a little bit laggy from my side, but hopefully you guys can hear me okay. Anyway, let's just go through now the request that we've had in the room about looking at Eurodollar, and I certainly will look at Eurodollar. I'll show you exactly what I mean when I'm looking at Eurodollar just now. If we have a look at what's happening on, just zoom out a little bit onto say the 4-hour charts. Let's just do that now. What you can see is you can see a market which obviously, you can see that yourself, FaZe, which is creating a series of higher highs and higher lows. Now, interestingly, what we can see now is if we analyze the market structure, yes, we created a new high there, new higher low, but what's happened? We've had our first sort of just early indication that we may be topping out here. Break out above that high. Market creates a new higher low down here at this point, and then fails to create a new higher high here. That's our very first initial sign. What then happens is we get what's called a change of character. Not quite, or you can call it a break of low, but it's really just like it's like an initial structure change. It doesn't confirm anything for me just yet. What I'm looking for is, and what I just said to you in the room, is I'm basically looking for now a breakdown below this next low. If we do get a breakdown below that low, and that's why I'm not trading it just yet. If we do get a breakdown below that low, look for an FVG or an order block to then potentially take Eurodollar lower, and we might start to begin a new trend to the downside. What you're saying is, can I use this order block potentially as a support area? Definitely. There's no reason why you can't use this area as an area of demand, as an order block area to potentially take this market higher if you still believe that Eurodollar is maybe just in a pause around here. It's not as clean as you'd like, because we've created that first initial sign of a structure shift. But we are still within bullish structure, certainly on the daily time frame. You can see that. And you could use that area potentially to take euro dollar higher up to this high at 1.12762. Absolutely no reason why you can't do that, because we are still within bullish structure. And yeah, let's see how it gets on. It could do all right. But if we're wrong and we get a breakdown below, look for something to take this market lower. Okay. Okay, hopefully that makes sense to you. Any more messages in the room? Yes, we have. Good day to you, Dan. Thank you very much for the message. Hope you're doing well. Hope your trading has gone well this week. Jerry, hello to you. Good morning, and I hope you're doing well as well. And thank you very much for tuning in, and thank you very much for the message today. And let me just check the chats on the others. Mutebi, hello to you. He's on YouTube. Are we buying or selling on euro dollar in general, or on euro dollar? If you mean on euro dollar, then yeah, we're looking for basically this 1.12 area to potentially act as support to take it higher. But if we're wrong and we get a breakdown below this area, then I think we're going to turn bearish on euro dollar, which is not something that's been said very often in the last few weeks. That's for sure. Okay, good stuff. Right, let me now go through the stock market. For those of you who are looking to get involved and potentially trade some of these smart money concepts, well, let me just show you. If you go over to the trading room, howtotrade.com, and you join our trading academy, you can, if you like, dive into our trading academy course. It's from course number 1. We've got 7 different courses, different modules. Pretty much covers everything you need to know about trading, and it does take you from a beginner stage to hopefully being some sort of confident trader. And in course number 6, so it's slightly advanced, we've got what's known here as course 6 module 3, smart money concepts. That is really the backbone of my analysis on a daily basis. So if you want to trade with me and you want to know the way that I study markets, then this module here on trading smart money concepts, there's all of them there that I use, and also a little bit of a methodology that I use to trade as well. Feel free to get stuck into that if you do wish to do so. Phase, thanks. I'll look for lower time frame entry at the demand zone. Yeah, why not? That's definitely not. Wait for that lower time frame reaction, and then potentially look to trade that high. There's nothing wrong with doing that at all. Right, Olive 2017. Good morning to you. This is the guy who is smashing our trading competition. Absolutely amazing gains, and he's winning our competition, which is fantastic. So very well done to you. Hopefully you can keep that up. And you did ask me as well, Olive, if I wanted to do a smart money concept stream for indices, and that's exactly what we've got scheduled for today. So you should enjoy this one, which is good. Dan, hello to you. What have you said there? Any idea on the Australian dollar after the CPI? It's a good question. Let me just have a quick look at that. And go over to the howtotrade.com website. And if you go over to our resources and our trading tools, you can view our economic calendar. And as you can see, what we've got here is our what Dan's referring to is pretty much the only, well, not pretty much, the only high impact news event of the day, which is the Australian consumer price index data, which is good. So let's have a look at that. 3.5% was the actual, 3.4% was the estimate, but the previous was 3.8. Okay. Let's have a look at Australian dollar. Clearly he's gaining off the back of the release. No question there. I'll be honest, Dan, I'm not sure this is going to be a massive factor in determining the direction of the Australian dollar. I think more we need to focus on what the RBA are going to do at their next meeting rather than that. But if I'm just looking at it from a technical perspective, yeah, I thought there would be some demand zones in there. This looks to me, especially on Australian dollar versus the Canadian dollar, that we just started to form a base. We've tested that and we've seen that this has acted as support at 912 on numerous occasions. And I think we could be up for a blast higher here, potentially up to 918. We did get an inflation print which is higher than the previous, but it was lower than before. So it's a little bit of a mixed bag. And when that tends to happen, I sort of just say, right, let's just park that one to the side. I'm not sure that's going to be a huge driver. But definitely worth noting, 100%. The Aussie US dollar continues to look like it's going to potentially break above. Oh, that's interesting. What's it done here? Equal highs up here. Just see how we've just grabbed that liquidity at this high. So if we are going to get, and this is a very, very early call, if we are going to get a stronger dollar come through, and not even stronger, just a retracement in the dollar, because it's been getting absolutely battered, the US dollar I mean, then we could potentially play this liquidity sweep. So we could play this fake out. It's a risky play, don't get me wrong, but we could look for something like this. If you want to be risky about it, you could look for even just say, right, there's our liquidity sweep. It's a 15 pip SL. And we can maybe target this demand zone here. And that's a 5.4 to 1. So it's not a bad risk reward trade at all. It's just a higher risk trade. What you may want to do instead is break it down onto the lower time frames and just wait for some more confirmation. We have got a bit of confirmation here. You can see that, look. Maybe we could use this area instead. We could look at that. That looks pretty cool. And that sits right at 0.68, which is a whole number, round number, psychological number. That looks like a decent potential opportunity. Higher risk, don't get me wrong. We have got the lower time frame reaction. Maybe look for 0.5% on that is something that I would do. I'd always half my risk on the lower time frames anyway. But yeah, it's a good spot. Good spot, Dan. I like that. It's cool. Thank you very much. Okay, let's have a look through some indices now. Just check the chats. Mutebi, hello. Try it in the live market. Help us get some money. This is live. This is all live. I'm doing this right in front of you right now. Anything that I would mark and I'm confident in, I would always come and trade anyway. I trade my own accounts. So there's no problem there. Right. Let's have a look. Let's start on the daily time frame and let's start on the Nasdaq. And before I do that, I just want to point you in the direction of the earnings calendar. The reason I want to point you in the direction of the earnings calendar is because we have got a very, very important earnings report out for one of these massive, massive companies. Nvidia, not sure if you've heard of it. You probably have. It's the AI craze. It's got a $3 trillion market cap or whatever silly number it is. It's massive. It's a huge company, and they're delivering their earnings report after the bell today. Therefore, we should expect some volatility in Nvidia stock today and in the Nasdaq in general. It's not loading for some reason, but just bear that one in mind for today and tonight. Really, so it's going to have a big bearing on whether we break out to the upside here on the Nasdaq or whether we start to maybe come down lower. Now, if you look at it from a smart money concepts point of view on the daily time frame, you can see that really what we can notice is obviously a bullish market. It's quite clear. And the general bullish market is still being respected just about when we held on to this order block at 17,400. But obviously within that, we have had a bit of pressure, and there's been, sort of mini structure within that that's been breaking lower. But now we've broken higher again. We have to really give the nod to the broader structure, which is definitely bullish. And therefore, I'm not really too interested just yet, or really ever, in selling the stock market. Now, if we look at it from a smart money concepts point of view, yes, okay, what you can notice here is we've got a fair value gap on the daily time frame, which we saw a little bit of a reaction, but not really too much to notice there. Instead, what I'm noticing more than anything is we've got clear fair value gap or candlestick imbalance up at night, basically up at 20,100. And I think if the Nvidia earnings come in strong today, we could basically see $20,100, the 50% of this FVG being filled. If the Nvidia earnings come in weaker, then probably the flip side to that is 19,200, which is where the 50% of that FVG is as well. Probably can't trade it on the back of that because it's a bit of a mess, but let's just go down onto the lower time frames, see if we can spot anything of significance. And already, and if, by the way, if you're wondering what indicator and how I'm getting all these drawings up automatically, really, really good indicator, Smart Money Concepts by Lux Algo. Just click on indicators at the top, type in Smart Money, and it's just this top one. I don't use it as gospel, but I use it in conjunction with what I believe. What I'm noticing on the NASDAQ is if you look down here, we've had quite, and I always use equal lows as a liquidity target. And you can see how that sell side liquidity, this was happened yesterday, right on the US Open, was taken, and we started to see that break higher. So I'm already sort of painting a picture where we've got that sell side liquidity. For me, that's sort of like the floor of the market. If I just drop that down even more onto a 15-minute time frame, you'll notice that what we've got here is two potential entries. Entry number one is this key level. Well, we've got these sort of, I'd probably say something like that, 19,584. And this is just obviously how I see it. I'm not saying I'm going to necessarily say that this is our entry and stop loss or anything like that. But this is if you're going to trade order blocks. This is essentially the zones in which you would look to potentially trade and how you would trade them. And if you're looking for a more of a deeper retracement, like say for example that you traded it from here, but you got blasted out and you got stopped out and it went all the way lower, then potentially what we could look for is this, where the initial move come from down here. I'm blocking it down here, and again the targets are the same. $18-to-1 risk reward and 12-to-1 risk reward if you wait for the deeper retracement. So if you tried to take the more aggressive approach, the aggressive trade, and you was potentially wrong, then you still maybe have access to a 12. So you've got two potential opportunities there, 12-to-1 and 18-to-1 risk reward. So even if you're wrong on the first one, you potentially got a good chance for a fantastic scoop on the deeper retracement. So that's the sort of plays that I'm looking for. And you can see how I've just gone from the daily in the time frame and the higher time frames and just worked my way down and started to paint that picture on a lower time frame. Right. Just check the room or anything like that. Okay, good stuff. So that's the sort of thing I'm looking for on indices at the moment. The S&P 500 might paint us a sort of a similar story. But it's a little bit more of a mess, I noticed. Yeah, we're putting pressure on these all-time highs. So if you're going to find a similar sort of trade on the S&P, targeting these all-time highs at 5668 is probably going to be your key level if you're going to try and target that. Where can we maybe get that from? Well, you've got a potential zone down here at 5584. I'm not sure if we're going to get that far. Definitely the NASDAQ looks a lot cleaner in terms of its price action than these markets do at the moment. I mean, that's just an absolute mess. But similar sort of thing, liquidity taken down here. We could maybe look for 41,197 on the Dow. But for me, when I find a piece of analysis that I like, across the 3 US indices anyway. I don't tend to deviate away from it because I like the look of the price action on the Nasdaq. I think if we get that boost as well from the Nvidia earnings, then that could be brilliant. That could really drive us up towards that 20,000 area. And I just think that it looks a lot cleaner than the other two at the moment. So that's why I pick the Nasdaq for today. And I do enjoy the Nasdaq anyway. This is the German stock index, the DAX. I don't know if people trade this. A lot of people do. It's been on a bit of a tear up recently. I had this marked and marked this area in the room. Sometimes this is the nature of trading. Really clean order block area down here. You can see basically what happened. That order block also sat at 17,000. I had a nice buy limit placed there. Look how close we got. Sometimes that's the nature of trading. I didn't really get FOMO. I've just sort of tried to wait for the next pullback, which hasn't really come. And it looks to me like maybe what we may see is we'll wait for this market to top out. Maybe we'll get some fibs in there. I know that's not smart money concepts, but you can see right in this sort of golden area, we've got that 50% of we've got that 50% of our FVG situates right there. So I'm always going to have my eyes on that level for sure. If we could ever get there, 18,000, probably not. Lower time frames, is there anything on the lower time frames that can give us an opportunity? We've sort of just got to go with the strong bullish trend at the moment. You can see really the cleanest area in which we can potentially buy from a smart money concepts point of view is down at 18,675, where we've got this hourly order block in here. We can see we've blasted up to a new high as well, so that just looks like a really easy trend continuation potentially from that support area there. Let me just quickly go through some of the requests that we've got. Let me check the chat room. Okay. Ben Ngoli, hello to you. Thank you very much for the message. Wants me to have a look at USD versus the Japanese yen, which I have no problem in doing. Okay, dollar yen. Now, from a 4-hour chart perspective, it's potentially looking like as soon as we broke out of this reaction we had, it looks to me like we're starting to consolidate and starting to range around 143 to 145. That sort of price action is what I'm expecting with what I see right now. We're sort of in no man's land, if I'm being honest, on USD yen. On the one hand, it looks to me like we could be coming down to 143, and also my sort of longer term target down at 140. However, when you look at the 1 hour time frame, what you're starting to notice is a base forming, and this order block here being respected. And that makes me think, are we starting to bottom out here? We can see that we've had a 1 hour reaction. So although on the higher time frames, I favour definitely more downside, on these 1 hour and 15 minute, 30 minute time frames, maybe even the 4 hour time frame, you're starting to see this order block be respected. And that means that this low down here remains really important. Because if we get a breakdown now below 143.68, that will confirm my bullish nature and may even be worth a sort of a sell stop down at this low. Because I think if this low goes, I think we're going to make a next leg lower, and I think we're going to probably come down and test at least 143 if we break down below 143.6. But if this continues to act as support, and what happens is we find a little that the market starts to form almost like a base here, then what we could see is a move up towards, where was it, on the 4 hour time frame, these equal highs. Can you see that at 146? We may start to see that coming through. So what's happening here is the market is trending lower, but it's starting to squeeze around this 143.145, and that makes it a difficult trade at the moment, in my opinion. But yeah, I do still fancy, you see down here, right? I do really fancy a move down to 143. That is my overriding opinion. but I'm going to sit out and I'm going to wait to see how much of a base this forms on the hourly time frame around here. Because if we start to see more breaks of structure, then we could be up for a move up towards 146 or something like that. Trading related question from Dan. He said, how many positions do I have open on a daily basis? I would say that on average, I try and trade between 1 or 2 setups per week. Now, because I trade on the more so on the higher time frames, if I trade on like if I bring a trade down from the daily onto the 5-minute or 15-minute, I always halve my risk, right? So I always say, right, let's just lower that risk down towards, if I normally risk 1% or 2%, I risk say 0.5% on those lower time frames. And therefore I'm in and out of that trade probably in the same day. But my normal sort of scope of trade is like a 4-hour daily time frame, and I'll risk more like 2% per trade. I might be in that trade for a couple of weeks, or at least for a week. And so I don't really have too much more exposure once I get that set up, if you see what I mean. And that's just the way that I trade. There's no right or wrong on that. That's just the way that I tend to do things anyway. Udoma, hello to you. Good morning, and thank you very much for the message. In terms of trades I'm in right now, Mutebi, I'm not in a trade right now. As I said, beginning of this week, I had a clean slate, and I've not seen anything that's as clear cut. The only trade that I'm actually looking at in a lot of detail is that Aussie versus the US, Aussie dollar versus the US dollar. But it's only going to be really a 0.5% trade, this one here. I do like the look of that, if I'm being honest. And the other market that I like the look of is gold. The reason I like the look of gold is if you look on a daily time frame, what I've done is I've drawn quite an aggressive Fibonacci really from the market structure high, which is here, to this market structure low. And you can see we're sort of sitting within what I'd like to call a golden area. And when I went down onto the 5-minute time frame, you can see that reaction. And then right into this 5-minute order block. And now we're just starting to get that move higher. So I'm wondering if I can play that gold higher, because, you know, it's just been really the most nailed on thing at the moment is trying to get in some sort of dip on gold. And that's really been the story of gold. So I've got a clean slate at the moment. I've got my eyes on the Aussie versus the US dollar. I've got my eyes on gold, and I've definitely got my eyes on that Nasdaq trade for today. And these days in the week are the start of the days where we start to see the real move of the week come in. So I don't really typically trade on a Monday and Tuesday, or definitely not on a Monday. But as we get into Wednesday, Thursday, or end of Tuesday, Wednesday, Thursday, they're the sort of the best times that I've found to really trade the markets. Jerry, please say as a beginner, which pair do you think we can start from this week with a good entry? Those ones that I mentioned are the ones that I've got my eyes on. They're the ones that I find probably the best ones to trade. We're in a difficult position at the moment because the dollar's taken such a hit. It won't just bounce back and make some sort of V-shaped recovery. It's probably going to consolidate for a while. And that can mean a little bit of choppy price action for a couple of weeks. Therefore, maybe steer away from Forex, maybe look towards the stock market, and maybe look towards gold as your markets to look at. Matebi says, thanks for the time you give us. That's absolutely no problem. I always answer the questions as much as I can on the stream, if anyone does have them. So I do have a title and a topic for the stream, but I am happy to answer any questions that people may have as well. We are on stream, by the way, every single day. Myself and our other coach Shane, and we're now across all of our, most of our social media channels that we can be across. So if you do want to look and you want to know when we're streaming, then if you head over to the trading room, howtotrade.com, you can see our streaming schedule. Shane's coming up later on, and then we've got 2 streams every single day, and they're absolutely free of charge. So feel free to come on. Hello to you, TM Tucker. He says, hello, Connor. Hello to you. How do you determine your preferred lot size to pips in your trades? So I work purely on percentages. So I will use if you where is it? Trading tools down here, automation. We've got an EA. We've got a risk manager tool that you can download for MT4 and MT5, and we have videos in the academy at the beginning of how to download them. I simply use this. So my preferred lot size will depend on the risk I'm trading. So let's say, for example, I'm risking 2% on a gold trade, which looks like this, and this is just completely hypothetical. I'm risking 2%, and this is the trade setup that I've got. What I'll do is I'll go over to MT4, my switch market's MT4, and I'll turn on my risk manager, which is I haven't actually got it loaded up. It's pretty good. I could probably get it loaded up. It's not loaded. But I turn on that risk manager basically, and literally the risk manager allows you to just basically put the stop loss in that you want. So my stop loss will be down here, and it will calculate the lot size for me, and that's how I do it. And it's just all automated. So I don't really target lot size to pips. I just target percentages. So I'm risking 1%. My risk reward's 2 to 1. And I set my stop loss accordingly, and then I just basically put that in the risk manager EA here, and then yeah, it just tells me what my lot size is going to be, and I just press buy or press sell. Faye says, general question: do you trade for a prop firm? I trade both, to be fair. I trade my own accounts and I trade prop firm. My own accounts that I trade with are basically the broker that we have, which is switchmarkets.com. Obviously, if you guys want to open a free account with Switch Markets, you can just head over to switchmarkets.com and get started and open up an account. You can get a VIP trading account, $250 per one lot. That's the accounts that I use. It's 0% fees. I've never had any problems with it. It's also the company, the overriding company owns Switch Markets. So I have access to the support guys. So if anyone has any issues with that, you can message me as well. Treehawks put in the trading room. Treehawks also put a my FX book thing in there as well. And Jerry says it needs advice for beginners. If my best advice, if you're a beginner and you're getting involved in these streams, or you're getting involved in the markets in general, is just take some time to learn about how markets work. Come and join our trading academy. It starts, if you just go to course number 1, literally, it shows you the trading foundations, gets you involved, gets you on a 3-trade challenge where you can actually download the platform and start doing it, and just work your way through those modules. Set yourself a little bit of time, 20 minutes per day. Just do one lesson at a time, and it won't take long for you to understand the sort of the basics and what to do. No worries, TM. If you want to download that tool, come over. It's completely free. It's a good one, and also you can, if you don't want to do that, you can use my FX book. Okay, amazing stuff, everybody. Thank you very much for the questions. Yes, and Dan rightly said there's a lot size calculator on switchmarkets.com. I'll drop that in the chat now. That you can, there's loads of things you can use. Lot size calculator will be a good one for you to use as well. It's pretty much the same thing. It's like a risk manager tool. Okay then, everybody, I will end the stream there, and for those who have tuned in across the socials, thank you very much, and for those who are in the room, again, thank you very much, and for those who are in the room, I will be active for the rest of the day should you need me. Keep an eye out. I've just posted some market analysis on the pound versus US dollar in the market analysis section. It should be a good one, and also really focus on those Nvidia earnings later if you're going to be trading the likes of the Nasdaq, because it should be quite a volatile end to the week. Thank you very much, everyone. Take care and trade well, and of course, trade safe. Thank you.